The crypto market is evolving, and Raoul Pal is breaking down why this cycle might not follow the usual playbook. With major regulatory changes on the horizon, institutional investors waiting for clarity, and liquidity cycles just beginning, could we see an extended bull run into 2026? Raoul dives deep into how the market structure is shifting, what role stablecoins and strategic reserves could play, and why Bitcoin's downside might be far smaller than before. If you're navigating the crypto landscape, you won't want to miss this insight-packed breakdown. Subscribe now and stay ahead of the curve.
Look at what David Sachs has been able to do so far. I would say has been somewhat, positive, even though I think a lot of people were looking at the fact that you can get, across the aisle, talking to each other about the future of blockchain. That's an achievement. What are your thoughts in reference to what he's going to announce this week, which could be just around the corner? Something big in digital assets coming soon.
The answer is we don't know yet. We know they've got a lot of work. We've heard that the whole working group fell apart because typical of crypto, nobody can agree with each other. It's like, so, roll your eyes with like embarrassment about how bad this space can be. But that's where we got to. And Trump's like, I've had enough of all of you, get out. Let's start this. Now, David Sachs is a smart guy. He's got the ear of Mark Andreessen. They kind of, there's a lot of smart people around the space who understand digital assets. We know we've got to get stablecoin regulations first. That's what they've talked about. So that's a big one because it's a large bar of US debt. So they want that. Then we've just got to get the general framework, and then we've got the strategic reserve. It's all going to come, but it is going to take time. David Sachs has got the enviable position of trying to figure out some regulation for AI, which is much harder than crypto to figure out because we've got something much larger in terms of humanity scale impact. So look, they've got a lot of work to do, but we need something at some point soon that starts laying foundations. I think the first thing would be stablecoins.
All right, so stablecoins kind of leading it, potentially maybe going into some sort of government organization in terms of a blockchain launch would be pretty significant.
Yeah, or deciding who regulates this stuff. CFTC,
yeah, exactly.
SEC. Yeah. Just some of those, a bit of clarity of direction of, okay, this is how we're thinking about it, and this is what we're going to do. We don't need the full final, wording. It's like, it's going to the CFTC, it's going to be a thing, unless it is proven to be a security, which will be an SEC thing, and this is how we're going to deal with it as a different type of asset class.
How much of an impact do you think that would have on this, we'll call it this cycle, and then I want to ask you, do you believe this cycle even exists anymore, the idea of how cycles have run in the past?
Yes, I think it's a big deal for this cycle because when I speak to institutions, both from the investment side or those that want to build on blockchain rails, this clarity is desperately needed, desperately needed. Now, they kind of are moving forwards because they know it will be pretty liberal now going forwards in how we can use this technology, but it's still not easy enough for corporations to do this with ease. So look, it's a very big deal. It will bring in much larger check sizes from much larger players over time. So yes, for this cycle. In terms of cycles, unless the US government manages to pay off all its debt in one go, we're in this cycle. It's been the same repeating 4-year cycle. It's driven by the debt refinance cycle. It's a global cycle. There is no way around that because of the aging population and the debts that we have. So the only thing is, will this cycle morph it somewhat? Of course, they all do. Like the last cycle peaked really early. Why? Because the business cycle peaked early. In March 2021, the business cycle and liquidity peaked. When we go to 2017, liquidity in the business cycle peaked right at the back end of the year, and then it had a blow off top. 2013 was similar. So the last time around was actually the abnormality, and there's always going to be an abnormality. So what is the one most likely to happen this time? Well, if the crypto markets and liquidity peak when the business cycle peaks, and we'll use the ISM survey, the Institute of Supply Managers survey, as our proxy for that, we've only just bottomed and we're breaking 50 to the upside. And that's going to take several months or a year or so to get there. So probabilistically speaking, it might push it into 2026. So that's something we'd have to get our heads around, is actually it goes a bit longer than we imagined. So that's what I'm thinking about this cycle. Then we've got to think, okay, is the downside going to be the same? Because we've got new players, we've got ETFs, we've got different stuff. People can put Bitcoin in their 401k. And I would argue we probably have less downside. Bitcoin's downside has been less each cycle. So maybe it's down 50 or down 45 this cycle versus NASDAQ would be down 20, let's say. That would make sense. Now, a whole bunch of everything else will go down 99% or 95%. But what we'll see is the majors going down less than previous cycles. I think that's my most likely outcome. And so it can catch people off guard, because if people are waiting for the bottom of a cycle in 2026 and it's more of a sloppy sideways range and everyone's expecting it to go lower, you can end up having this whole mess where you're very bullish, but you don't own anything. So I think let's see how it plays out. But I think it'll always be different. I'm just trying to figure out where it's going to be different. It's definitely not going to be a short cycle, because we've only just started the liquidity cycle. We've only just started the business cycle. So it won't be short. Will it be towards the back end of the year, which will be normal? Or could it be back into 2026? And then what does 26 look like? Maybe less frantic than the last cycle, which we saw a lot of collapses and a lot of things going horribly wrong. But you've got to remember how money works in the economy. Right now, there's all of these pension plans and all of these private equity funds and all these VC funds. They've had no exits. Nothing has gone public. Things like Stripe, still not public. In the crypto land, Circle, still not public. Kraken, still not public. So that we need to see the capital markets open. We need to see money get recycled, and then money can move through the system. So that's one of the issues. So a lot of the crypto-based investments is from the crypto market that releases as the capital goes higher. But of the traditional investors, there's still not enough money. So we're having to bring in new capital, and that might be the Middle East or a couple of others. But we're not getting the traditional investors fully involved. They just don't have money right now. And that's a function of what I talk about when I talk about the business cycle. The business cycle, if you think about it, when the business cycle is expanding, it means people have more earnings, whether it's at household levels or corporation levels. Those profits and earnings get recycled into investments. And that's what drives a lot of this. So we're still at this point where we don't have everything in place to have a massive institutional involvement, but we are definitely seeing signs of it. Once we get the regulatory clarity as well, just a basic guideline, it'll accelerate further. So I only see acceleration ahead, but it just takes time.